Hi everyone, hope you're all doing well, and today we're going to talk about some stocks to watch this week. So last week was an interesting week. We had the likes of Microsoft reporting earnings, very good earnings. It tried its best on, I believe, Tuesday to lift the stock market up, but and then on Thursday we had Apple report earnings. Once again, their earnings were fantastic, and that stock tried to lift the stock market up. And we did have a little bit of a bounce at the start of the week, but then it started to dip again towards the end of the week. So we are trying to see a little bit of a rally starting to happen in the stock market, but we're still selling off a tiny bit at the moment. I do generally think that what I was starting to say, I think over the last 2 weeks, is that, in my opinion now, I believe the more of the big tech and a lot of the big market caps, I feel like they could potentially drop a little bit more, but I generally do look at a lot of the small market caps now, a lot of the growth stocks, and how much they have sold off, and I do generally think we are getting towards the bottom in them small and growth stocks. Now, obviously that is not a guarantee, and anything can happen in the stock market. When you think we can't go any lower, we can go lower, but when I do generally look at some of the valuations that we're at and the prices that we're at some of these growth stocks, small market cap stocks, I would not be so surprised to see them in the next coming few days, weeks, to start putting in a bit of a bottom in. Maybe a little bit different for these big tech and a lot of the stocks that have been propping up the market. And they did try to put a bit of a rally in, and that tried to lift the stock market up. But that's currently my thoughts on that situation. But yeah, and my thoughts on Apple and Microsoft. But going into next week or this week, there's a few stocks to keep an eye on, and they will be reporting earnings and what it could mean for the stock market going forward. Now, as always, Monday is a very quiet day on the earnings front. There's not too much reporting earnings. Tuesday, it starts to pick up a little bit. You have the likes of ExxonMobil, UPS that report earnings. Tuesday after close, though, does get really interesting. Obviously, we've got AMD. That stock was on a crazy run previously to what has happened. And then PayPal. PayPal is a really interesting stock that's going to be reporting earnings. Obviously, PayPal at the moment is one of those stocks that was one of the first kind of big market cap stocks, 192 billion before it actually decided to do a nosedive off the cliff. I believe it was around about a 300 billion market cap. And obviously this is down 50%. This was one of the first kind of big names to start falling off a cliff and joining a lot of the growth stock sell-off. So it'll be interesting to see what PayPal do. Obviously their guidance will be very important, what guidance they come out with. I think it was in the last quarter, I believe it was, they did cut their guidance slightly. So we'll see if they kind of carry on pushing out weak guidance going forward, or if they're starting to see a recovery. And it'd be interesting to see. This will be the first one that has a big major company that's lost obviously half of its valuation that's coming to report earnings. Like some Microsoft and Apple, for example. Sure, they've had a little bit of a wobble in the last kind of couple of weeks, but this is one that has since July time been in that kind of growth stock sell-off. So this would be really interesting to see what the reaction this gets off the market and the numbers that it brings out. It'd be interesting to see if they bring good numbers out, how the market reacts to them, if we see the stock actually start going up, or if the stock just carries on selling off. So this will be a very interesting one on Tuesday for me to see what guidance these guys put out, and also because of how much it has sold off, how the stock market and Wall Street react to the earnings. So I think that's a big one there. And the next one is Google, that's going to report earnings as well on Tuesday. Obviously this is a fantastic company. 25p ratio, not too bad at all really, considering. And when you think about it, you get Google with this, you get the obviously YouTube with this, and this one is actually having a bit of a pullback. If you look here, for the last kind of 6 months, this stock hasn't really done too much here. It's kind of consolidating, which is quite nice. You don't want to have a stock get too far ahead of itself, and for me, Google hasn't done that. It's actually keeping to a really good valuation. It's a really good company, and with fantastic growth as well. So this is one that I think that when you do build a portfolio, it's really good to have some big tech holding down that portfolio. And I think Google is definitely back at attractive prices. I believe Amazon and Facebook both are there as well. So I wouldn't mind potentially owning Google, but it's one of those that there's just so much selling off at the moment that you can. And I guess really I would always prefer to have Facebook over Google, but it's a fantastic company and it's a fantastic investment as well, and especially with to buy on the consolidation it's currently having at the moment wouldn't be a bad move. And then we get Electronic Arts, but I think the next big one will be Starbucks. So Starbucks is a stock that I never owned. Here's a little bit of a story here about sometimes stocks can do nothing for ages and then go on an absolutely crazy run. So when I got invested into the stock market, one of the stocks that caught my eye was Starbucks. I was looking for a stock that was had a little bit of decent growth, a decent valuation. I was trying to focus a little bit more on profitable companies at the time, and also pays a dividend. And with this company, at the time, the P ratio was a little bit lower than I believe than what it is here. I believe the P ratio might have been 21ish or something. I think the dividend yield, same again, was something around this sort of area. And what had happened with Starbucks is I looked at this company and it was $60 in around about 2015. And basically for a long period of time, as you can see here, the company nearly went 3 years with the share price doing nothing. So I looked into Starbucks and I was like, okay, the share price has done nothing for 3 years. But then I looked at the company and I saw everything, like they're making more money, the revenue's increasing, the valuation's dropping. Everything in the business was just moving more and more. And I thought, you know what, you must have been gutted if you made this investment in October time of 2015. You know, you spent 3 years of this stock doing nothing, but even though people will say, oh, it's a terrible stock, it's not doing anything, when you looked at the business was doing absolutely fantastic. And I was really, really close to buying Starbucks. I was very close to buying Starbucks for a very long time. I think I started looking at it in 2017, especially when it stayed there even longer in 2018. I was like, I really should be buying this. And I don't know what it is. I don't know why I never ended up buying it. I think at the time, I think it was just a bit of lack of confidence. And I think as well, like, I saw no one else talking about it. And I was like, why is no one talking about this? Surely this is an amazing opportunity. And I think maybe I just didn't have the confidence to pull the trigger on it, and it's a massive mistake from me because it's one that I should have really bought. And even if I bought from there, the stock would, right now you would have a fantastic company, would have been up 72% on this one, as well as collecting a really good amount of dividends across the years as well, and it would have been a really good core holding, and right at the peak before it had its major pullback, over 100% in 3 years, and then you add in that dividend. Would have been a really good purchase. So just a little bit of I thought I'd just give you that lesson on maybe about having a bit of confidence if you really think it's a good investment, and also that sometimes you do need to have patience. That was a case of having to have 3 years patience for that one, I guess. So yeah, and then next up, AbbVie. So this is another one, really interesting one. Some of you guys might not have been in the stock market when this happened, but AbbVie was doing really well. Can I zoom out a little bit quicker? Yeah, you'll see the stock had been on a historically a really good run through the last kind of couple of years. The stock got in towards 2018, and it basically lost one of its patents, depending on how you say it, for a product, so everyone else could sell this product basically. And the share price tanked because of this, but still the company was making improvements to kind of counteract that. They had recently acquired a new company, I believe, and there was also a few new products they're releasing. So the company were basically like, yeah, it's going to affect us a little bit, but what we have going on, the financials will be okay in the long term. But still, Wall Street and investors hated it, and basically, from 2018, this company got massively sold off. It lost over half its valuation. Cough, cough, what's kind of going on right now. Lost half its valuation. It's sunken. There was quite a few people buying this. A YouTube channel at the time that I was watching, he doesn't make as much videos at the time, but he's a really good stock market YouTuber, which is Ali's World of Stocks. I know I believe he was quite actively buying this one, and he was a guy that I respected, and I was thinking about buying this one. Eventually, I never kind of got into it because it was the bio pharma area, and I'm not really a huge... I don't really go into this area, but I considered it, and this is once again one of those stocks that fell off a cliff. And if you did buy it, even if you bought up here and you just carried on averaging in here, you didn't get all the way down to the bottom here, as long as you bought a great company on a decent valuation, so even if you didn't catch it at $67, you bought it at $85, you still would have been up 61% on that one, and would have caught a really good dividend yield. And if you were even better and you actually caught towards the bottom, you obviously you're doing well. But that's just another, I thought I'd just share that history lesson with you guys. That's a stock from 2018 that obviously went through that, what I just said there. And then you've got Waste Management. That's a really good dividend company that's reporting earnings. Facebook, obviously that's going to be a really important one for me. Be checking them earnings out. Facebook earnings probably will end up moving Pinterest and Snapchat before they do report earnings themselves on Thursday. You got Spotify, Qualcomm. Qualcomm's a great company. Spotify, Not sure on Spotify. It's one of those that I actually really love the product, and I think that it is by far the best music platform out there. But don't know if it's the right company for me to buy personally. So yeah, it's one I will keep an eye on though, and those are the ones on Wednesday. The most important one for me will be Facebook. Thursday, Nokia, Penn National. These guys actually dived last time off earnings, and it's been all gambling stocks are basically being killed off in the last few months. If you invest in Gang and DraftKings, you will know that. And Penn National is exactly the same. So I'll be keeping an eye on this one in particular because of Gang and DraftKings as well. So that's something to say there. One that I actually did think about buying some shares, but I just thought I can't buy any more shares just because I've already got so much exposure to this space really. And that's pretty much it really. I think there's a couple of dividend stocks there people might be interested in. After the close, Amazon. Now Amazon is very similar to Google. It's one of those stocks that has done nothing basically now for a year and a half. Amazon has done nothing for a year and a half. In fact, it's down in the last year and a half. Valuation's not too bad. It's still a massive growth company. Same again, if the problem here is, at these sort of prices, Google, Amazon, I'd love to be buying these companies, but it all comes down to there's just so much down at the moment and so little cash that you got to prioritize. But I think this is once again, if you want a big blue chip company for your portfolio, a great company that has been consolidating for nearly a long period of time. Last time it consolidated for this amount of time, you look at that there, what happened? Boom, you're up 51% out of nowhere. And that's the thing, this is why you can't time the market. There would have been people in that time frame that would have got bored holding this stock, and what just happened? Boom, you would have had all your gains in 6 months, and then you consolidate. There's nothing really that would have told you that stock was about to explode in 6 months after being flatlined for a year and a half. That's why you can't time it. But getting back to the point, Amazon's obviously going to report earnings. Fantastic company. We'll see what happens there. Ford, Snapchat and Pinterest. Obviously Pinterest will be the big one for me. We'll see what they report. It's not the thing is with Pinterest, they could report fantastic numbers. The big thing will go down to monthly active users, and at the moment the suggestion is they're going to be quite weak, and that's what the stock will move off. You've got Activision Blizzard, who obviously have just been bought out. Unity, I know a few people are fans of that one. I never really got into that one myself just because I don't think it has as much growth as I would like, and it also loses a fair bit of money. But there's a lot of people bullish on it. And then you got Skyworks, Skechers, GoPro. GoPro are making some good moves. If it had a different management team, potentially I could buy it, but I don't really like the management team there. But they are making a lot of good moves over there. And then on the Friday, a little bit quieter, but I know a few people do play Bristol Myers Squibb as a dividend stock. So shout out to you guys if you own that in shares. Royal Caribbean there is actually down there as well. But yeah, those are some stocks just to keep an eye out on this week and see how they do, and a few that I will be keeping an eye on. So yeah, we'll see how they do. I think Pinterest is historically the most volatile stock in earnings season, so definitely that will probably more than likely move a bit off earnings, so we'll see. I think last time it reported earnings, it went down over 20%, was it? So yeah, I'm sure that one will move in particular. So hope you enjoyed this little preview going into this week, guys, and some companies reporting earnings, and also a little bit of history lesson, I guess, on a few of these stocks anyway, guys. So thanks for watching. If you can, hit the like button. If you do want to know when I'm buying and selling companies, make sure to join the Patreon. There's also a Discord with 600 members on there and 2 exclusive videos a week, and I will see you on the next video.